All right, these are the solutions for stockholders' equity. Stockholders' equity quiz. So let's just get through these multiple choice here. So the residual interest in a corporation. Let me see. Let me pick a different color. Let's go with red. Residual interest in a corporation belongs to the common stockholders. That sounds right. I believe that's it. Board of directors. No, the board of directors represent the stockholders. The preferred stockholders, they're equity, but they aren't ownership. And in management works for the stockholders. So it is the common stockholders. And residual interest just refers to anything left over if the company's liquidated or if the company's operating and there are funds or resources left over. So residual just means left over. 2. Which of the following statements related to dividends is correct? Dividends must be paid in the period declared. That is not true. You could declare them on December 31st and pay them in the next quarter. Distributions, so this is clearly incorrect. Once again, I am not good at much in my life. Pretty good at multiple choice questions. I suggest you approach each one as a true false to try to eliminate as many as possible. Okay, B. Distributions to owners must be in compliance with state laws. That is correct. So this one looks incorrect. So I'm going to say this is a contender. Incorrect. This one is correct, which would make it incorrect for this question. Dividends must comply with stock contracts as to preferences and participation. Absolutely. If there's preferred stock, it'll get its dividend first. So this is, I guess to make this more clear, this is correct. This is true. So correct, this is a true statement. This is a true statement. Dividends must be declared by the board of directors. That is absolutely true. Okay, so management is not in charge of that. And this is false, which makes it incorrect, but the correct answer. All right. Number 3, Jackson Corporation issued a 100% stock dividend, which had a par value of 1 cent and a market value of 123 before the dividend and 62 after the dividend. At what amount should retained earnings be capitalized for the additional shares issued? All right, so first of all, it's a large stock dividend. This is a large stock dividend. And large is at par. Large at par value. Okay, so we don't care about the market value. At what amount should retained earnings be capitalized? So, in other words, by what amount are we going to reduce retained earnings? It's the par value times the number of shares issued. So, which would be 100% times number outstanding. And I'm sorry, I have this. I'm injured. It's really more difficult for me to write than usual. Before the stock dividend. I'm having a little pain writing here. Okay, so their market value is incorrect. No capitalization, that's not true. In either case, if it's at a small or a large, there's going to be some capitalization of retained earnings. Market value on the declaration date, par value. Okay. Number 4, when a property dividend is declared, retained earnings is reduced by. Okay, this is a little bit tricky. Because literally what you're going to do is retain earnings, and you're going to have property dividend payable. And when you have a question, multiple choice question, especially with like a big paragraph before it, it's somewhat useful to look at the question in the question and then think about it for a second to avoid useless information. And then you'll have either a loss or debit to asset, or the asset will be debited, and then either a gain or the asset or asset credited. Now, the thing that's a little tempting here is it says retained earnings is reduced by. Well, it's reduced by this amount, which is the fair value of the property, and the fair value of the property here. Now, if it asked you the effect on stockholders' equity, I would have to say book value, because the fact that it's asking for an account, retained earnings is not here on the declaration date. So I would say it's the fair value of the property. This would be the adjustment to market and the adjustment to market. So the total effect on stockholders' equity is going to be reduced by the book value of the property, but the retained earnings is the fair value of the property on the declaration date. Okay? It's definitely not the cost. The carrying value and the book value, these are both the same, which would give you a little clue that maybe those don't work. But they would be true if the question was, what's the total effect on stockholders' equity? That would be true. Okay, so, all right, tough conceptual question there. Which of the following are requirements of the declaration of a cash dividend? Sufficient retained earnings, absolutely most states. So a big T for true. Most states require that dividends have a credit balance even after the declaration. So that's true. Declaration by the board controls distributions to the owners. Sufficient cash. If you don't have cash, you can't have a cash dividend. Okay, so while cash isn't a legal requirement, it's just a practical requirement. So all of those answers. All right. On July 1, NAL issues 2,500 shares of its $10 par value common stock. What is the amount? So I'm going to look at the question. What's the amount of preferred stock par? Well, I don't even need to read all that. Let's see. 5,000 of its convertible preferred. So $10. So it's 5,000 times 10. Simple enough. Okay, the amount of the proceeds allocated to the additional paid-in capital is going to be what the total amount of allocation less what we calculated in 6. So these were issued for a lump sum of $145,000. We're going to multiply times the value of the preferred over the value of the preferred plus the common. So it's 5,000 times 20 over 5,000 times 20 plus 2,500 times 24 equals 145,000 times 100,000 divided by, what is that? Is that 100 and 2,500 times 24 60. That's what that. Okay. Okay. Oh, this is not, I should put my equal sign there. This equals 90,000. And we take this, 90,625, and subtract 50. Where are you, pen? And we get 40 625, which is not looking right. All right, we'll end this here and see if I can fix it, because this definitely is not looking correctamundo. I gotta tell you that.